Hello, and welcome fellow investors. Today I will shine some light on why I am currently doing the inexplicable. That would be shorting Aurora Cannabis Inc, the highly praised and highly overvalued company. As always, please check the description for further info. 90% of these assessments are based on fundamental analysis, whilst technical analysis is only utilized to gain an edge when entering and exiting the market. In other words, trying to get the best price in any given week. I'd like to start out with the charts. We can tell that Aurora, although dropping in price recently, still is very much at quite the high point. The abrupt price increases usually point to an in the past highly undervalued company or future growth prospects, and for that reason the price rapidly increased. Or in Aurora's case, a company that has been hyped and as a result of the price increase has turned from either an undervalued or fairly valued stock to completely overvalued, because usually a company isn't able to grow at the rate at which the stock price increases, as is the case with Aurora. I'd like to continue with the investor presentation. This can be found on the Investor Relations Department on the Aurora webpage. Some interesting new prospects crystallize upon reading it. The bottom chart seems to point out that not production, but buyers are the issue for Aurora. Whilst production facilities are continuing to be built, we'll take a look at those later, customers can't just be artificially produced. This is also supported by the figures. Kilo produced and kilos sold. Aurora management is very aware of this issue, thus expansion into Europe is currently of high priority. Many European countries no longer prohibit the medical use of cannabis, whilst countries like the Netherlands famously even allow general consumption of the populace. Also, more and more US states are allowing the medical use of cannabis. With every state that allows this, Aurora gains many customers. Aurora has made many acquisitions in the last years, opening up new sectors like Aurora Nordic and Aurora Germany by buying up local companies. Earlier I said that production isn't an issue, currently nor in the foreseeable future. This is because Aurora's three largest production facilities are currently under construction. Two are expected to be finished mid-2020, whilst one is still to be decided. This will more than cover future supply. Now all Aurora needs is demand, which should come with time, probably, hopefully, within the next 2 years. Shortly said, the financial ratios are all not too ideal, apart from the book value and gross margin. Once the share price has dropped, these ratios will look a lot better, and Aurora will turn into a good buy. The income statement reflects what has been true for the rest of the video. Too high operating costs, too low sales volumes lead to losses across the board. Revenue and profit are increasing at crazy levels, but just won't turn into earnings until expenses are cut. This has been stated in the annual report. This is currently being worked on, and the management knows this. Profits will come naturally with increased sales and production volume, because increased production volume means cut costs. The balance sheet is where Aurora really starts to shine as a future investment. Regardless of negative income, Aurora has been able to continuously increase its amount of assets without a major increase in liabilities. This has led to a skyrocket in stockholder equity. The cash flow report shows nothing unexpected. Negative operating cash flow due to a net loss, negative investing cash flow due to continuous investments into new facilities, among others, and positive financial cash flow resulting from a debt issuance. All of this is highly volatile, as can be seen by the net cash flow. Before we get into the conclusion that can be drawn from this analysis and my investment advice, I would like to note that I do not think that Aurora has no future. but instead it is overvalued at its current market price, and thus is bound to drop to more reasonable prices. Once it reaches these prices, or even goes below to become undervalued, Aurora is a magnificent investment with great growth potential that could become the next big thing. Due to Aurora's incapability to have positive income and its stagnation in growth due to the demand of its products, the company has been suffering. This is evident when regarding the financials, although management is aware of this and is working on turning things around. Plus, the company's assets are increasing at growth stock levels. This means once it is able to generate income, there seems to be nothing holding Aurora back. My personal recommendation is that the stock is shorted until a price of $3 per share is reached, and then successfully bought, meaning that as long as the price is below $3 a share, it is a good buy, and the lower it drops, the more should be bought, unless obviously the prospect of success changes. Then a re-evaluation would be necessary. On that note, I would like to thank you for tuning in and encourage discussion in the comments. Also check out our Instagram, which is linked in the description. There we also post investing information. Have a successful day investing.